Hello and welcome to Ahead of the Week for January 7th to the 11th. I'm here at Banc De Binary's Limassol office talking with Harry and David about this week's upcoming big data releases. Let's start on Monday. The Swiss National Bank releases its monthly currency reserve figures for December. Can you tell us why this data is important?
It shows the total value of foreign currency reserves, which is held by the Swiss National Bank.
It's a good insight to tell you what the central bank is doing to manipulate their currency in the markets, of which the SNB, Swiss National Bank, are probably one of the worst culprits next to the Japanese. So, yeah, there's been a lot of movement. The Swiss National Bank tried to peg the franc against, specifically against the euro, aiming for a rate of around 120 from September. It's been floating around 121. There's some rumors that the bank have actually been doing some crazy things with some trades, some very large trades against the euro yen and the euro dollar to try and peg it, of which it was unsuccessful. So the figure coming out this week should reflect that, but I believe, or we believe, that a lot of the markets are already aware. The rumor is already going around, so we'll wait and see what happens.
And now to Canada. PMI is coming out on Monday. Why do the opinions of purchase managers carry so much weight in the financial markets?
PMI, or Purchasing Managers Index, is a leading indicator of economic forecasts. No company wants to be sat with more inventory on the shelves that it can manufacture or sell. So they're very much in their ideal position to make sure that the companies see the economic possibilities. They have the inventory to manufacture the right product, the right amount, not too little, not too much, so they're sat with inventory they can't get rid of. So the markets obviously look at the leading companies and the purchasing managers with their sentiment carries a good indicator of what everybody should expect for economic outlooks going through into the following months. So any figure above 50 is a positive figure. In Canada, the figure kind of dropped a little bit from the previous figures, but from there, it's, it could be quite good. But again, as with everything, we're just going to have to wait and see what the figure is before we trade on it. So.
On to Australia and November's trade balance figures. Investors always keep a keen eye on these figures. Could you tell us why?
It's because export demands and currency demands are always directly linked. The purchasers always have to acquire the foreign currency in order to buy the products that they're willing to import. Export demand always has a direct effect on pricing and production of domestic manufacturers.
And as we see, the export demand can continue for Australia, and one of their major partners obviously being so close to Asia. They're a big mining output. There'll be an increase in the volume, but there's a decrease in the actual commodity pricing. So how that will translate is the trade balances, I think, are going to be very difficult. We've got 3 of them coming out this week, so I think it'll be a positive figure. Oil has started to rise, not really that tied too much to Australia, obviously, but with the other countries it is. Other commodities are starting to rise a little bit as well, so it could have a good number.
Staying with Australia, on Wednesday we see the release of November's retail sales figures. Just quickly talk us through that.
Well, look, the retail sales figures are really the sale of goods out of shop doors, okay? The figures leading up to the Christmas rush weren't exactly that great. November's figures, which are coming out now, because it comes out like roughly 35 days later, it's a bit hesitant to say which way it will go. There was an indicator, obviously, because the Christmas period is such, it's so highly looked at, also for such a focus. It was actually a 2.9, nearly 3% increase from the year to date, the last year. So we know that figure is quite good, quite stable. What the November figure will be, I don't know. But it will be a combination of all of the indicators that come out on Australia around about the same time. It's going to really indicate whether it's going to be a good trading opportunity.
And finally, building approvals. New building approvals in Australia dropped sharply, more than 15% the last time these figures came out. Tell me, what can this data tell us?
Well, building permits are an excellent gauge of construction activity. The more permits which are approved means the more people in the building sector are employed, like subcontractors, and surveyors and inspectors. All these kind of people have jobs, which means more money circulating in the economy, which is very positive for the economy in general.
It will usually have a ripple effect going out through there. In terms of the actual indicator that's coming out, if you look at the data from the previous indicators, it's up, it's down, it's up, it's down. But there are quite a lot of rumours coming out at the moment that Australia is, and the building permits, especially around certain areas of Australia, are going through a frenzy of approvals. So this is just directly translated to developments in China are very constrained, and it's a very difficult market. Now there's an awful lot of Chinese investment going into Australia because of its associations. So we're expecting this figure this time to be quite positive. Once that figure comes out, with, again, as we said before about the other figures, I'm looking for that one, or we're looking for that figure to be the icing on the cake for an Australian dollar increase.
On to Thursday now, and the euro. The European Central Bank will release their minimum bid rate, followed by a press conference. Interest rates have been in line with predictions since December 2011. Why should investors pay attention?
I don't think they really will. As with any interest rate decision, usually the price action is already adjusted into the market. However, what the big news is always surrounding interest rate decisions is the statements that are made roughly 45 minutes to an hour afterwards, especially the Q&A session where reporters are trying to make them fall over, trying to get real-time thoughts out of them. They're going to be their decision that are going to base their decisions the next time around. So in terms of trading opportunity, it's the statement. Keep an eye, obviously, on the rate that comes out. It will probably stay at 0.75%. There's some speculation it will drop to 0.5%, down a quarter point. But with German inflation just peaking above what the ECB benchmark should be, there's really very little chance that they'll do that.
And now to sterling. The Bank of England's Monetary Policy Committee posts its official bank rate on Thursday. Any changes expected here?
Not really. I mean, the rate stayed at 0.5% for quite some period of time. There are a lot of changes coming into the Bank of England as well. You've got Jim Carney coming in, replacing Mervyn King. Last time the decision was up for discussion, all 9 members of the chamber turned around and voted in the same direction to keep rates as they are. But growth in the UK economy is starting to find a foothold. Banks are starting to lend a little bit more to small to medium-sized businesses. Home mortgages, approvals for mortgages seem to be on the rise and increase as well. So there's no real need to move away from the inflationary-based decision for interest rates to stimulate a drop for the interest rate. And it's too early days for them to say, let's cash in on the growth and increase the rate. So we're very much focused on looking at the figure staying as it is. But again, as always with the interest rate decisions, they're already factored into the market action. So it's going to be the statements, the Q&A after in the press conference that is going to really dictate whether there's going to be any major volatility and trading opportunities. So.
And do you agree with this?
Yes, I fully agree with that. I think there is no need for any further stimulus in the UK economy right now. The UK, even though it's directly linked to the European market, the fact that it has its own currency has helped it come out of the recession in a much simpler way. One mustn't forget that London is a very big banking hub, especially in the investment banking sector. London has more American banks than New York and more Japanese banks than Tokyo. So as far as foreign investments are concerned, London is probably one of the best places to invest your money. All the huge investment companies are there, so many rich people from all around the world use London for their investments. So there is a particularly good amount of money circulating in the economy, so no need for further changes in the interest rates for now.
Turning now to Friday, both Canada and the US will release their trade balance reports. Tell us why exports are so important for currencies.
Export demand and currency demand is always directly linked. A foreign company that needs to buy products from a country needs to firstly buy its domestic currency in order to carry out the purchase, in which case boosts the particular currency of the market.
With the trade balance coming out from the US as well as Canada, I mean, obviously there's quite a large trade deficit between the US, what it imports and exports. But in relation to Canada, I mean, one of their major exports is oil, and if you look at the price action of oil over the last couple of months, it's seen a dip. It's starting to pick up again now. So the US has done quite well with its trade balance. Last month, Canada didn't do quite so well, but you know, it may, as with Australia, it may pick up in terms of volume, but the commodity price action that's happened in the market in the last month or so is probably going to have wiped out that having an impact on the actual indicator itself. So probably stagnant ground, I would have said.
Thank you very much. This has been a Head of the Week report with me, Sarah Fennick, at Banc De Binary's Limassol office with Harry and David. Thank you for watching.